Daily Crypto News Update, July 22, 2026. Based on the latest reporting currently featured by Crypto and Stock Market HQKH International Collection, the crypto market is showing cautious strength, but regulatory uncertainty, geopolitical risk, and weaker investor sentiment continue to limit confidence. The cryptocurrency market remains cautiously positioned as Bitcoin holds near $66,000, despite bearish sentiment, geopolitical uncertainty, and concerns about global liquidity. 1. Bitcoin remains resilient, but limited stablecoin inflows raise questions about the strength of the latest breakout. 2. Higher oil prices could increase inflation and interest rate pressure, affecting crypto and other risk assets. 3. The U.S. Clarity Act remains under political negotiation as lawmakers debate ethics rules and customer protections. 4. Solana's stablecoin supply has reportedly reached approximately $15 billion. 5. Ethereum ETF inflows are showing signs of recovery, supported by institutional demand. 6. Corporate crypto-treasury strategies remain under pressure as financing, dilution, and market risks increase. 1. Bitcoin holds near $66,000 despite a cautious market. Bitcoin was trading around $65,900 to $66,000, while CryptoSlate's 7-day new sentiment indicator stood at 39 out of 100, classified as bearish. The site reported that Bitcoin's latest move above $66,000 was supported by returning ETF inflows and falling exchange balances, but stablecoin outflows suggested that fresh market liquidity remained limited. Analysis: Bitcoin is demonstrating resilience, particularly as geopolitical tensions and oil price risks remain elevated. However, a price breakout becomes more sustainable when it is supported by strong spot market demand, stablecoin inflows, and continuing institutional purchases. Without those conditions, volatility and short-term reversals remain possible. 2. Oil prices and geopolitical tension remain important for crypto. CryptoSlate highlighted the relationship between Bitcoin and Brent crude trading close to $89 per barrel. Higher oil prices can increase inflation pressure, potentially encouraging central banks to maintain tighter monetary policy for longer. That environment can reduce investor appetite for risk assets such as technology stocks and cryptocurrencies. Analysis: Bitcoin has remained comparatively stable despite the oil shock, but the larger concern is not only oil itself. Investors are watching whether higher energy costs affect inflation, interest rate expectations, the US dollar, and global liquidity. 3. U.S. crypto legislation faces a critical political test. CryptoSlate reported that Senator Cynthia Lummis is promoting the Clarity Act as a framework intended to strengthen rules around exchanges, customer assets, and regulatory responsibilities. However, the proposed protections may have limits, particularly regarding bankruptcy treatment and the legal separation of customer holdings. CryptoNews separately reported that negotiations over political ethics provisions could help unlock a Senate vote. Previous disagreements had pushed the legislation's prediction market odds below 40%, showing continued uncertainty about whether lawmakers can reach a final agreement. Analysis: regulatory clarity could encourage greater institutional participation, but political delays may continue to influence market sentiment. Investors should distinguish between a proposed agreement, a Senate vote, and a law that has officially taken effect. 4. Solana's stablecoin ecosystem continues expanding. CryptoNews reported that the stablecoin supply on Solana reached approximately $15 billion, with new issuers changing the composition of assets operating on the network. Analysis: growing stablecoin supply can indicate stronger demand for payments, trading, decentralized finance, and settlement activity. However, supply growth alone does not guarantee higher SOL prices. Transaction activity, liquidity quality, developer participation, and regulatory conditions also matter. 5. Ethereum ETF demand shows signs of recovery. CryptoNews reported that BlackRock's ETHA helped Ethereum exchange-traded funds record consecutive weeks of inflows, reversing an earlier period of weaker demand. CryptoSlate showed Ethereum trading around $1,923, up approximately 2.1% over 7 days but slightly lower over 24 hours at the time its market data was displayed. Analysis: ETF inflows can strengthen Ethereum's institutional narrative, but investors should monitor whether demand is broad across multiple funds or concentrated mainly in one product. Ethereum's outlook also depends on network revenue, staking conditions, and activity across decentralized applications. 6. Corporate crypto-treasury strategies face increasing pressure. CryptoSlate reported that Strategy's Bitcoin-related performance measures had turned negative after its share count increased while its Bitcoin balance remained unchanged for 4 weeks. Another report said Bitmain generated most of its revenue from Ethereum staking but faced complications related to a long-term contract. Cryptonews also reported that Satsuma Technology shareholders had voted to wind down the company, presenting it as another warning about the risks associated with corporate Bitcoin treasury models. Analysis: corporate crypto holdings can increase exposure during rising markets, but they can also magnify losses when token prices weaken, financing costs rise, or shares are diluted. Investors should evaluate debt, cash reserves, share issuance, and liquidation risks, not only the quantity of crypto held. Market outlook: the current environment remains mixed. Bitcoin is showing resilience, while institutional adoption and stablecoin activity continue expanding. However, regulation, energy prices, geopolitical tension, and access to market liquidity could determine the next major direction. Do you believe Bitcoin can maintain its position above $66,000, or is another correction likely? Share your opinion respectfully in the comments. Follow Crypto and Stock Market HQKH for daily cryptocurrency news, market analysis, economic updates, and global financial developments. Disclaimer: this content is provided for news and educational purposes only. It does not constitute financial advice. Cryptocurrency prices are highly volatile, and readers should conduct independent research before making financial decisions. Thank you for watching. Kindly please help and follow for more update.